All right, gang. Happy Tuesday to you. Welcome back to the live trading room, the New York live trading room. That is. Hope you guys had a great weekend. If I didn't have a chance to see you yesterday, or if I haven't seen you in a while here, funny we've been so heavy on the fundamental news events that it seems kind of weird to have a lower a lower type of or I guess a week with less major impactive news events. So the markets are kind of taking a little bit of a break. We're going to start off today with the trade of the day, and it's going to be more of an educational one. It's something that we haven't talked about a while here. I don't talk about it often, but we are going to be looking at a potential advanced pattern formation here on the euro yen. No, not the euro yen. What I want to go. Euro yen has one already. On the pound dollar, and it's going to be a potential butterfly pattern. Now, do any of you guys trade butterflies? I have a very interesting relationship with the butterfly pattern. The butterfly pattern is one of the advanced pattern formations that I do not trade, but it's actually my favorite because it's the one that I understand the most from a psychological perspective. So it has this place in my heart. I did trade it for a little bit, just because I had very specific requirements, because there were some issues with the stop loss. The frequency was so low that it just wasn't worth keeping around in comparison to other things. So there's no bad blood or anything like that. It just didn't provide enough opportunity for me and the type of butterfly that I needed. But this is going to be a cool one because this is one that lines up with some of the other elements that we look for in a price chart, mainly structure. So we're going to have our starting point right here. This is going to be our X leg, this swing high to swing low right here. We're going to bring our Fibonacci retracement on from that swing high to that swing low, right? So this first move is going to be our X leg down to our A leg. This first retracement is going to be our A leg to our B leg. Go ahead and write that on. So that's X. This is going to be our A down here. This is going to be our B up here. And you can see that our B leg hits our 786. So the fact that we hit our 786 Fibonacci retracement level makes this an invalid cipher, then an invalid bat, and an invalid Gartley as well. So it puts us on butterfly alert. We then have a C leg. Our C leg comes nowhere near violating the A leg. So this is going to be valid as well. And the difference between this pattern and, let's say, a Gartley or a bat, those other M and W shaped patterns that all complete within themselves, is that the butterfly is one of the few patterns that actually completes outside of its starting point, right? So we look at patterns as being basically like a range, right? That's why we see most of them come in periods of consolidation. So a typical, let's say, Gartley, right? The starting point, your X leg, that's the top of the range. Your lower point, your A leg, that is the bottom of the range. And then everything else completes within that range, right? You see the same thing with the cipher pattern, although the range is kind of created by the C leg, but it still completes within the X leg. The butterfly is a little bit different because the butterfly is going to complete outside of the range. So we're going to see a push above or beyond our X leg here to have the completion of the butterfly. Now, what makes the butterfly really confusing, and I guess you can say this for any advanced pattern formation, and you kind of get more specific once you decide on if you're going to trade it or not, is that there are many rules for the completion, right? Kind of the same thing we dealt with when we spoke about the Gartley pattern, how when I originally first started trading Gartley patterns, I had 3 different methods for a completion point. And of course, I was young and dumb and didn't care about rules-based trading and just wanted to trade stuff. So there was no real consistency in which of those methods I chose. You know, one day I'd choose method number 1. Next day I'd choose method number 2. Next day after that, I'd choose method number 3. And of course, you know, whichever one worked, I would do that one again. If it didn't work, I would do a next one, and no consistency, anything like that. The butterfly pattern is very similar. So if you're going to choose to trade this pattern, it's very important that you try out the different methods and you pick one and stick with one, right? Pick one, stick one. Pick one, stick with one, and trade that one consistently. So I'll share with you two today. One is going to be the decompletion, looking at that being an AB equals CD pattern, right? So this is our X or our A to B move. Simply copying, pasting that move and looking for an equal measured move higher and having that area be your decompletion. Another one would be taking a Fibonacci extension, and we're going to invert it from the A leg back to the X leg and back down, and looking for a 127. In this particular case, they both line up, which would give you a decompletion right at, sorry, I'm always horrible at finding my stuff here. You would think after all these years, which would give us a decompletion right at about 121.04. So X to A to B, B to C, C to D. Now, earlier I mentioned that the reason I don't like trading butterflies is because of the stop loss and the fact that most of them, I had a very low frequency in trading them because most of them didn't give me what I need. In this particular case, right, if we look left, we can see that this completion point is also right by a previous level of structure. So you have a nice built-in structure level that you can put stops above for this, providing you safety. Now, what's cool about the butterfly pattern, right, is the butterfly pattern, just a little bit on the psychology behind it, is the butterfly pattern is a relief pattern, right? So basically what you're looking at is you're looking at the violation of this X leg. You're looking for the continued bullish move up, right? Same thing, higher high, higher close, prediction that we go up. And then you're looking for the place where the market is going to show some relief. So the market has run out of steam, the area where no more new buyers are interested, or there's a less amount of new buyers interested. The area where maybe those old buyers are looking to take profits off, right? The area where you're looking for sellers to be interested in. And this clicks all of those boxes. Because let me ask you this. If you are a buyer, are you more likely to buy or be interested in buying as soon as we get the break here, or once we get up here? What would you guys say? Point A or point B, or one or two? If you're a buyer, would you be interested in buying once we break and close above, or once we've already broken and closed above and moved up 300 pips? You're probably more inclined to buy at the beginning of this move than at the end of the move, right? Unless you're a new naive trader, because that's exactly what newer and naive traders do. They buy too late. Now, if you are a seller, are you more inclined to sell once price breaks out of this X leg, or once price comes to the next level of structure? Well, you're probably more inclined to sell once price gets to the next level of structure. And the last one, if you are already a buyer and price is moving up and you're making money hand over fist, you're probably more likely to take some sort of profit, especially in this type of situation where we're in a clear bearish trend. You're more likely to take some type of profit at the first sign of danger, which happens to be this previous level of structure. So you can see the psychology behind the market, where you have not only less new interested buyers, right? If you guys are brand new, so the market moves off of kind of the difference between buying and selling pressure, right? That's the basics of how price moves. When the buying pressure outweighs the selling pressure, price goes up. When the selling pressure outweighs the buying pressure, price goes down. It's not necessarily buyers versus sellers. It's rate of orders and stuff like that, right? So when you have less interested buyers, and so that's going to slow down the rate in which price pushes up. When you have previous buyers that are now becoming sellers, now more selling pressure is coming into the market. And now you have a new flood of sellers coming into the market as well, because, well, that's a previous level of structure and that looks like a nice level. So you can see the shift of where during the breakout, the buyers outweighed the sellers, the shift to the sellers outweighing the buyers. And the result of that is typically a little bit of relief, or at least a move downward, and the market can decide whatever it wants to do after that. But its butterfly pattern is cool because it it's kind of an advanced pattern formation that represents that perfectly. So potential bearish butterfly here on the pound dollar daily. Completion at our previous level of structure around the 121 even handle. Let me know if there's any questions. And if not, I'll shut the live stream down. I did have a question on the live stream earlier. I got a comment earlier. I want to read that. Akil, just want to say thank you. Your podcasts are so valuable. The words cannot explain. It's not just the trading element, but the life changes to be better. Personally, please don't ever stop posting. Thank you. Akil, I meant what I said. You can also show an example. I meant what I said. Also, could you show me an example entry for a breakout pattern? Thank you. Sure. So this would be a breakout pattern right here. So if we, or a breakout trade, if you wanted to put a buy stop right as soon as you break out of the X leg, that would be an example of buying a breakout. If that's what you meant. If that's not what you meant, let me know. But example of a breakout trade. If this X leg is your previous level of structure, and this is supposed to be the powerful mark that holds price in, if you're an aggressive breakout trader, the most aggressive way to enter it would be to put a buy stop right above your breakout point. And then as the market breaks out, boom, you are involved. Then, of course, you can get more and more conservative from there, as we always talk about. So hopefully, I know there's a little bit of a delay on YouTube, so I'll buy some time here, but hopefully that answers the question. And if not, then we'll just revisit it another time. So looks like that's it. So live streamers, I'm going to boot you out. You know how we do. We come in, we do one trade walkthrough, then I let you go. Of course, if you ever want to see more, just get on the platform, www.tier1trading.com. Check out a 14-day trial membership. You can join the London room for a few hours, join the New York room for a few hours, and do that multiple times a week. Also, before you head out, do me a favor, hit that like button. If you have any comments or a question that I didn't get to, just type it in below and I'll go back and read them. Live rumors. Let's dig